Assalamualaikum and good morning. We are Group FAR570 and today we will be presenting our topic on MFRS 134 Interim Financial Reporting using the company 7-Eleven and MFRS 8 operating segment using Axiata Group Berhad as our case study. Before we begin, let's start introduce. My name is NURULJANNAH Hannanie binti RAHIMIE, FARAH Nur Aisyah binti BARDUL NURHANIS ARIFAH binti Nurul Fazilah binti MAHAT. The company that we choose is 7-Eleven and Axiata Group Berhad. For 7-Eleven company was founded by J. Singh Thompson in 1927 as the Saltland Ice Company in Dallas, Texas. The company's corporate name was changed from the Saltland Corporation to 7-Eleven in 1999. The company was renamed in 1946 as to reflect 7 a.m. to 11 p.m. operating hours and pioneer the convenience retail concept. 7-Eleven is the world's largest convenience chain operating over 80,000 stores globally. For Axiata Group Berhad was founded by Telekom Malaysia on June 12, 1992, who originally operating STM International Berhad. The company mainly provides mobile network services, broadband and digital solutions and operates in several Asian countries like Indonesia and Cambodia. Then renamed to Axiata Group Berhad after being demerged from Telekom Malaysia in 2009. Axiata is also involved in telecommunication, infrastructure, and digital and technology investment. Today, the chairman of Axiata Group Berhad is Tan Sri Shahril Rizal Rizwan.
For Part A, Question 1, MFRS 134 require company to present relevant and timely financial information during the year, so users such as investor or shareholder can monitor the performance during the annual report is issued. Interim reports is shorter than financial year. It can be complete or condensed. Interim report also can be issued semi-annually, quarterly or bi-monthly. The purpose of interim report that investor can know what happened to a company more quickly and to evaluate entity financial position, performance and cash flow. For example, during COVID-19, interim report help shareholders make timely and informed decisions because they can see the current financial impact and not outdated data. There are two methods used. The first one, integral method, that costs are estimated for the full year, then allocate to each quarter. For discrete method, record the annual expenses in the period occur during the quarter.
In the Part A, Question B, what are the two significant events and transactions that affect 7-Eleven's financial position and performances? The first one is expansion and increases in capital commitment in property, plant and equipment, PPE. Next is on the digital payment ecosystem transaction. The first event that significantly affects 7-Eleven's financial position and performance is on expansion and increase in capital commitments, which is investment in PPE. The group reported capital commitments for property, plant and equipment of about 126.732 billion ringgit as at 31st December 2024. This reflects ongoing store expansion and infrastructure investment such as opening new stores. This event is significant to the financial position of the company because it increases the numbers of non-current asset PPE of the company. And not only that, on other perspective, it also may increase the liabilities or cash outflows if it was financed by debt or financed by internal funds. This transaction leads the company to higher depreciation and operating costs, but they can expect it to generate future revenue growth from adding more those new stores. This aligns with the company's growth strategy, which is revenue will increase due to addition of new stores, but costs also rose due to expansion. Secondly, the event that significantly affects 7-Eleven's financial position is on the digital payment ecosystem transaction. 7-Eleven Malaysia Holdings Berhad had made a huge amount of payment to Razor Fintech Holding Private Limited. This payment mostly for e-wallet transaction amounted around 5.97 billion ringgit and received from Razor for e-wallet transaction is around 1.4 billion ringgit. The impact on the company's financial statement are these large transaction volumes has mainly affected the company's cash flow and liabilities. From this point, it shows that e-wallet transaction can generate commission income, which is revenue to the company. However, it also involves in increase on the transaction cost, which is affecting 7-Eleven profit margins. This transaction show that companies' reliance on digital payment ecosystem transaction in their daily operation.
Next, I would like to present about interim financial reports based on MFRS 134. Firstly, interim financial reports contain four main financial statements. First, statement of financial position show the company financial position such as asset, liabilities and equity at specific dates. Second, statement of profit or loss show the company performance including revenue and expenses. Third, statement of cash flow. It shows how the cash
is generated and used in operating, investing, and financing activities. Fourth, statement of changes in equity. It shows changes in owner's equity during this period. This statement may be presented incomplete or condensed from in interim reporting. Next, I would like to explain the types of interim reports. Basically, interim reports can divide into two main types, which are quarterly report and half-year report. Half-year report are prepared twice a year, and they divide into first half-year, cover into January to June, also known as 6-month ended. Second half-year, cover July to December. The half-year report provides a broader view of a performance compared to quarterly report because it's combined result over a longer period. Quarterly reports are prepared every 3 months, and there are 4 quarterly reports in a financial year. First quarter cover period from January to March. Second quarter cover April to June. Third quarter cover July to September. Fourth quarter cover October to December. Each quarter report shows the company performance for that specific 3 months period. This helps user monitor the company performance throughout the year step by step. Quarter report focus on short-term performance, while the half-year report provide a more comprehensive overview of the company's financial result within a year. Alright, for this part, I will explain the current and comparative financial statement based on this table. First, the current period of the financial statement are prepared for the period 31st January to 31st March 2025. This represents the most interim period, which is the first quarter of the financial year. All 4 main statements are included: statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flow. Next, for the comparative period, the company present 31st January to 31st March 2024. This same period from the previous year, which also quarter 1. For the statement of financial position, is compared with 31st January to 31st December 2024 because it shows the financial position at the end of the previous financial year. The company used the consistent approach by comparing the same period each year. For example, quarter 1 2025 is compared with quarter 1 2024. This ensures the comparison is fair, reliable, and not misleading because both periods cover the same duration and the business conditions. This consistency allows users to identify performance trend, evaluate financial performance accurately, and make better economic decisions. In conclusion, presenting both current and comparative period in consistent manner improve the quality and usefulness of financial reporting. Lastly, based on the interim report of 7-Eleven Malaysia Holding Berhad, the reporting period are presented as follow. This snippet shows the company present its interim financial report clearly and consistently. In conclusion, interim financial reports are important as they provide timely information about the company financial performance and position within a financial year. Thank you.
MFRS 8, which is an operating segment, can be defined as a component of an entity, as 1A, that engage in business activity from which it may earn revenue and incur expenses, which is including revenue and expenses relating to transaction with other components of the same entity. B, whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performances, which means the segment must be something that top management actively monitors. C, for which discrete financial information is available, the company must be able to separately identify financial results of that segment.
Chief Operating Decision Maker is a function and not necessarily a person. That function is to allocate resources and assess the performance of the operating segment. It can be the CEO, the Chief Operating Officer, the senior management team or group of executives. CODM is responsible for making key decisions about allocating resources and evaluating the performance of the company. CODM is the highest level of management at which decisions are made, but if a supervisory body is required to provide approval for those decisions, then judgment is needed as to whether this supervisory body is CODM. Function for CODM is to allocate resources, which they decide how company resources are distributed across different segments of the company. The second one is to assess performance. They evaluate how each segment is performing. And the last one is review internal report. So this is the CODM of 7-Eleven and Axiata Group Berhad. For 7-Eleven, the CODM is Tang Yumin as Executive Director, Co-Chief Executive Officer, and Wong Wai Kiong as Executive Director, Co-Chief Executive Officer. For Axiata Group Berhad, the CODM is Bibit Sort as Group Chief Executive Officer and Managing Director.
We will explain about segmental reports focusing on two main types, which are business segment and geographical segment. First is a business segment. A business sector is a portion of an organization that generates income and incur costs by providing a particular goods or service. It demonstrates how various goods and services affect the operation of business. For example, a company may have segments like telecommunication, infrastructure, or digital service. This type of report helps us to understand which business activity contributes the most profit or loss to the company. Next is geographical segment. A business activity are divided into geographical segment according to the location where the business offer its service or sells good. It's display the various region for the financial performance. For example, revenue can be reported separately for Malaysia, Bangladesh, Sri Lanka, and others. This helps user to see which region perform better and where the company is more profitable. Now, I will explain based on snippet from Axiata Group Berhad. In this table, we can see business segments such as digital telco, infrastructure, and digital. Each of these segments represent different type of service offered by the company. For example, digital telco focus on telecommunication service, infrastructure focus on network and tower services, and next, digital include digital platform and services. From this, we can compare revenue and profit for each segment to identify which segment performed the best. Besides that, this report also shows geographical segment and the digital telco, such as Bangladesh, Sri Lanka, Cambodia. This means the company is reporting performance based on different countries. For example, we can see total revenue and profit for each country, which help users to analyze which country generates the highest revenue, which market is more profitable. As a conclusion, segmental reporting is important because it provides more detailed information about company's performance. It helps stakeholders to understand business performance by activity, compare performance across different regions, and make better decisions. This shows that Axiata uses both business and geographical segmentation, giving a more comprehensive view of its financial performance.
This slide presents the benefits of segmental reporting under MFRS 8 using Axiata Group Berhad as an example. Based on the segmental information on page 5, we can observe that different segments contribute different amounts of revenue and profit. For example, some segments generate higher revenue but lower profit, while others show better profitability. This indicates differences in cost structure and operational efficiency across segments. Therefore, segmental reporting helps users better understand the overall business performance by analyzing each segment individually rather than relying only on total group's results. In addition, since Axiata operates in multiple countries, each segment is exposed to different risks such as market competition, regulatory environment, and currency fluctuation. This information is useful for investors and other users to evaluate both performance and risk before making decision economics. Hence, segmental reporting improves transparency and supports better decision making.
In conclusion, MFRS 134 and MFRS 8 enhance the usefulness of financial reporting by providing timely and transparent information. MFRS 134 focuses on interim report, helping users understand company's short-term performance and the impact of significant events, while MFRS 8 highlights operating segment to show which part of the business drive performance and how decisions are made by the CODM. Together, this standard improves transparency and support better decisions for investors and stockholders.